Welcome to Chartbusters. We're coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and as you can see, the market's a little bit skittish, though it appears, at least as of now, that the Bihar election verdict has gone as per what the markets did predict. The BJP is on top out there.
BJP, indeed, the NDA on top in Bihar, and that's exactly what the market is digesting as well. We had seen a rally post, the exit poll results had come by as well, which is why maybe some bit of decline from the highs, given the weakness that we're seeing in the global markets as well. The mid-cap index is something that we'll most definitely watch out for, because at an index level, it is outperforming the frontline indices in the sense that it's not falling as much. If you look at the broader markets, we have a few more number of stocks which are declining than the number of stocks which are advancing. 1,500 on the red side versus 1,100 or 1,200 in the green side itself. But let's focus on IRCTC. The company reported slow September quarter in spite of the early onset of festive season. And we spoke with the management on what they expect in the next quarter, the festive outlook for the tourism segment. Let's hear them out.
Overall outlook is very, very positive. Reasons being, as you correctly told, that there is a seasonal demand. Railway has run a large number of special trains also, and in tourism segment also there is a quite a demand, and I'm happy to tell that we could be able to find this opportunity to grab this business in the best possible manner. You see, historically also, our next quarter, that's quarter 3 and quarter 4, we'll be doing a good business in tourism. Reason being, all the foreign tourists are coming onto Maharaja's Express and the Golden Chariot, which this year we will be running like 7 trips. Last year we could run only 3 trips. And we have already booking got for Maharaja's Express, which is highest ever since its inception. So, and similarly, Bharat Gaurav trains, we have already launched Bharat Gaurav trains for this quarter, and the coming quarter, there is a pipeline. So, to me, we will be doing very good business in tourism segment during this quarter and the coming quarter.
All right, that was the management of IRCTC. A couple of important conversations coming up on the show right now. The first one is Eureka Forbes. A rare voice reported a decent second quarter where the revenue saw a 15% uptick. The profits grew 31%. The EBITDA crossed that 100 crore mark for the first time. We have Gaurav Khandelwal, who's the Chief Financial Officer, the CFO at the company, joining in. Thanks a lot, Gaurav, for joining in. A 15% revenue growth is what you've reported. The question is that, first half, you've done around mid-teens. Does this number continue? And if you could give us further clarity on, how will this number grow in terms of sales coming in from services and sales coming in from products? And in products as well, your key segment, the water purifiers and the others. Just give us a complete breakdown for the next couple of quarters.
Good morning. Thank you. I think I'll start off with giving a flavor of what has given us the growth so far, because that will give an indication of what will drive growth going ahead. As we stand today, our product portfolio has done extremely well. We've grown in high teens. Incidentally, with this quarter, our product business has grown by double digit in every single quarter over the last 2 years. And the reason for that is we've built a very strong innovation pipeline. We've invested in R&D, and that is something which is beginning to play off. Equally, we've made a strong pivot in driving penetration for the category as well, which is at a low 6%. And that is something which has helped a lot. We've also invested ahead of time on categories like robotics. And these are categories which are very clearly inflecting and are making a very meaningful contribution to our growth profile. So that is as far as the product story is concerned. The service business turnaround is very, very visible and clear to us. In quarter 1, we grew by double digit, and I'm pleased to share that in quarter 2, the growth has only accelerated. Sitting where we are today, I think the big picture from our perspective is that product business will continue growing strongly. And with service now coming back, we do expect to keep driving double-digit growth ahead as well.
Okay. All right. Hi, Gaurav. Good to see you in. This is Nigel on this side. Congratulations on a good showing. Now, for the year, if you had to pencil in revenue growth, what should we work with? Mid-teens growth? Should that be a fair number? And also, I'm looking at your margin trajectory. That's improved to mid-teens. But on a sustainable basis, what should it look like? And also, if you could throw in ad spends as a percentage of your sales, where do you see that number stabilize at? I think it's more than 20%, right?
That's right. That's right. So first, on as far as revenue is concerned, we will keep aiming for a double-digit growth. I think the categories in which we are operating have passed an inflection point, and with the pipeline that we have on the product side, that is something where the growth should continue. And with service coming through, I think double-digit growth is certainly something that we'll aim for. Although keeping in mind that the consumer sentiment is still mixed, but we believe that we will be able to drive a double-digit growth. As far as margins are concerned, on an H1 basis, our margins were up by 70 basis points year on year. We will keep aiming for a full year margin improvement. Just as a reference, a couple of years back, our margins were 6% odd, and now they've climbed to much higher levels. And we will keep aiming for margin improvement as we go ahead.
So
Advertisement and sales promotion spends, given the stage at which our categories are, with a penetration of 6% in water, a sub 2% in vacuum cleaners, we strongly believe that growth investments are needed to incubate these categories, and we'll stay the course as far as growth investments are concerned. We will obviously make sure that how do we kind of balance the return on our investments and growth and profitability.
All right, Gaurav, I need to just press you a little bit for numbers, because encouraging to hear about the double-digit growth, but in the first half, you've already done 13%. So double-digit is a given. And also in terms of margins from 6, it's moved to around 14%. Great going out there. For this year, should the street work with, say, 14 to 15% revenue growth? Will that be a fair ask? And on the margin band, consistently, since your ad spends are going to remain elevated as you penetrate further, should the broad guidance be 13 to 14%?
From a margin perspective, we will keep aiming for an expansion. I think the fact that in H1 we are up 70 basis points gives us a sense that the margins for the year will expand. And I think I just want to call out one important part of our business is the impact of operating leverage. With the gross margins at which we operate, operating leverage plays a key role in driving margin improvement. And hence, we expect margin improvement. As far as numbers are concerned, our bias will be towards growth investments, and that is a balancing that we keep on doing. But at this point in time, one should assume a full year margin improvement. It will not be to the extent of, let's say, the margin improvement that you saw last year of roughly 125 basis points, but you should expect a margin improvement to happen.
All right,
as far as growth is concerned, you rightly pointed out that we are at teens growth at an aggregate level, and our aim will be to kind of, strive to continue that and improve it. I'm also cognizant of the fact that there is a consumer sentiment which is still mixed.
Got it.
But we will keep aiming to sustaining our growth and taking it up as well.
Take that point. So teens revenue growth is something that you will continue to focus on. And, one has some estimates. Over the last 3 or 4 years, your margins have improved by almost 500 basis points. Brokerages expect, the operating leverage to play out maybe over the next 3 years, 200, 250 basis points on the cards in terms of expansion as well. But those are analyst estimates. And you said that you are looking to expand them going forward. Just a couple of questions. And, it is an underpenetrated category. I do understand that. But also highly competitive, right? If you look at some of the recent listings, say in the services side in particular, urban companies' thrust has been so high that, water purification service is something that is the key contributor for them. So much so that they took heart from that and entered the water purification hardware business as well, which is native. So on that, how do you expect to, contain your moat and expand over and above what you're doing here in light of this competition?
At a macro level, our belief is that categories which are operating at low penetration levels, they benefit a lot with competition coming in, because then there are more people talking about the category. And that is something that we've actually seen over the last 4 to 6 quarters. And we believe the category is now far more heard, visible and salient. And that has helped in kind of driving category salience. So at a macro level, we welcome the competition that is coming in. And from our perspective, there are 2 things that I'll call out. Our focus would be to not operate like a legacy company or a status quo company. We will be competitive in the market, and our innovation pipeline, our thrust that we've done so far is a reflection of that. Second, on the moat, I think this is a business that I would call out is relatively low on entry barriers on the product, but the real moat comes in on the service side, and we believe our moat on the service side is extremely strong. We've strengthened it even further. For example, every single of our 8,000 technicians are on our digital platform, so we know exactly what is happening. And as we go ahead, we'll keep strengthening these moats even further, because this is something which our view is that will be difficult for competition to replicate.
I'd be, it's very interesting because one would imagine that Eureka Forbes hardware is the moat and not so much service, whereas for urban companies, service is the moat and not so much hardware. But we'll monitor as things move along. Just a final question from my end before we let you go, Gaurav. Robotics and air purifiers, these are very small categories right now, but extremely interesting and fast growing as well. How much do they contribute to your growth, or how much do they contribute to your overall pie right now? And how much will they be, say, 3 to 4 years from now? How much do you anticipate coming in from both vacuum cleaners and air purifiers?
I'll start off with robotics, and it's a great question. This is a category which is clearly inflected. It's solving a very real consumer problem. And this is a category which over a 3-year period has come to a stage where it's become a bigger part of the vacuum cleaner category. And it's now making a very, very meaningful contribution to our growth numbers. Our view on this category is that this is a category which could become much larger as we go ahead. And what we have done is made ahead of time investments in innovation, in supply chain, in product capabilities, and that is something that is bearing fruit. We will keep focusing on accelerating this even further, because this is a category with a very long runway. As far as air is concerned, at this point in time, the category is relatively smaller, but it has got all the ingredients for it to become a lot bigger. 37 of the top 50 polluted cities in the world are in India, and that is something which gives a good lead indicator that what potential this category holds. Our focus there is on creating the innovation capabilities, and over a period of time, air would scale up. But at this point in time, I would say robotics is something as a category which is making a very meaningful difference for us.
Okay, all right. Gaurav, appreciate you joining in. Personally, I can tell you I live in a Mumbai-sized house, which is not very, very large, and I have 2 air purifiers at home. So, that's telling you the kind of demand that's there. Thanks a lot for joining in, explaining the business. Let's chat up soon and, understand the way ahead as well. For the time being, let's slip into a short break. As we do that, a quick programming note for our viewers. You don't want to miss this one meet. The new team at CNBC TV18 live at 3:30 p.m. today. Watch as our new anchors make their debut. Well, that's a saffron sweep that the street will be liking. The NDA in command, 176 seats is where they are leading. That said, let's get back to earnings. Muthoot Finance, that's the stock of the day. It's up close to around 10% after a stellar showing in the second quarter. The company has also hiked its AUM growth guidance to around 30-35% from around 15% earlier. Mr. George Alexander Muthoot, the MD at Muthoot Finance, joins us on the show. Well, sir, you had to make us wait for a few quarters and a few weeks. But I think over the last 2-3 times we have spoken, I've been asking you, will you be upping it? Will you be upping it? And mathematically, it looked like you're going to do that. Now, my question to you is, the street will like what you have done. 30 to 35% is no mean feat. But can it be higher? Do you think a 40% is on the cards? That's point number 1. And point number 2 is, what about yields? Competition is quite high as well. Do you see some kind of sacrificing on the yields front from here on? Or do you think you can hold on to current yields?
Okay, thank you. Anyway, we have revised the guidance from 15% to 30 to 35%, because in the first half year, we have already grown by 21%. So I think it is not correct to say our guidance is 15%. So, but then we are also seeing good traction in the gold loan offtake. In the H2 this year, this second half also, we are seeing good traction in the gold loan offtake. So I think that should augur well for us, and that is why we have revised the guidance to 30 to 35%. Of course, if there's an opportunity to grow more, we will certainly do it. But the guidance for us remains at 30 to 35% only. That is what first thing I would like to say. The second question is also answered from my response to the first question. That is, the guidance, etc., and the growth. See, we see a lot of demand for gold loan in these days, not only from the rural area, but also from the town, cities, etc. More and more people are starting to use or monetize their ornaments which they are having with them. Earlier, probably they did not think it as valuable as it is today, because today every media, every newspaper talks every day about the gold price and the record gold price, etc. So I think people are getting maybe they are realizing the importance of the ornaments they have, and probably when they require money, they are using this as a mode of.
Mr. Muthoot, just to follow up on what Nigel asked, you said that growth will continue. There are analysts who are expecting 40% growth for this year. Would that be out of whack? Because you've given a guidance of 30 to 35%. You've upped your guidance. The street believes that you can still do a lot better than what you've upped your guidance to. A lot of them believe between 38 to 40% is what this, the company can do this year. So I wanted your comments on that. And secondly, on yields, 18 to 18.5%, will they sustain at these levels?
So I think instead of the yields, we should be looking at the NIMs. So NIMs, we are thinking at 10.5%. So occasionally we get some bump in the yields because of some old reversals of NPAs and old churning of the NPAs, etc. Churning is actually what is happening here. The old NPAs with a lot of old age, lot of interest accrued on them becomes replaced with a new set of NPAs. So on that, we get a bump in the income. That is one of the reasons. So, but instead of the yield, we should look at the NIMs. So if the borrowing cost comes down, maybe 10, 15%, 15 bips is what we expect in the next 2-3 quarters. So we will still maintain our yield, maintain our NIMs, and probably reduce the yield. But there is competition is there always. All the banks are also doing this big business. Every bank has got a very big portfolio of gold loan. NBFCs also have. It is not that banks are taking away NBFCs loans or NBFCs are taking the business of loan. The pie is growing bigger and bigger every day.
It's not only that banks who are taking or NBFCs who are taking your business, you are also taking some of their business, because I'm looking at Belstar, out there, the MFI subsidiary, losses are reducing, no problems about that. So just a couple of questions. When does that become profitable? And the second part is that I read that you've opened 23 new gold loan branches in Belstar to diversify your portfolio. That is a little surprising because, you moved into MFI to diversify away from the gold portfolio, and now you're opening gold loan portfolios in Belstar itself.
Thank you. And the growth in gold loan is, of course, there. About Belstar, I think they have the problems are actually almost bottoming out. So we don't see any more problems coming. So going forward, the loss will get reduced and probably we will have a nil loss in the next 2 quarters. Thereafter only we will be thinking of a calibrated growth in the MFI portfolio. So MFI probably will start seeing some growth in the portfolio probably in the first and second quarter of next year. Having said about the growth, you wanted to know about our thoughts on the gold loans also. See, the Reserve Bank of India last about 6 months back changed or maybe revised the guidelines for non-MFI loans from 25% to 40%. Probably they also feel that a pure play MFI may not be able to sustain when there is some ups and downs like this. So they are expecting MFIs to do some other business also. So as far as Muthoot is concerned, other business other than MFI, what runs in our blood should be the gold loan. That is why we thought of doing some gold loans business also there. Although we have opened 23 branches now in this half year, we are planning to open about 150 branches in the microfinance Belstar also by the end of the year. So we'll have a mix of portfolio, some good collateralized gold loan portfolio as well as the microfinance. Microfinance alone may not be sufficient to take care of such aberrations in the collections and the market, etc. So they need some support from other quality portfolio also. That is what we are. That's our thought process on that.
All right, Mr. Muthoot, your shareholders of Muthoot Finance will be very happy. And they've heard your commentary on Belstar as well. They'll be wondering, can they get a chance to have another listed entity? Can we see the Belstar IPO coming out in Q4 or the first quarter of FY27? Is that likely?
As of date, they don't require much capital because, as you would have seen, the book is actually degrowing. We had about 10,000 crores. Now it has come down to 7,000 crores. And probably the next 2 quarters also, it will remain flat. So as of now, they don't need any additional capital. So as I said, after next year, when the other business and the MFI start looking up and they start growing, we'll require capital. At that time, we will have to probably think of IPOs, etc.
Maybe FY27 the IPO comes or FY28?
Anyway, we'll see. We'll play it as we require, sir.
Played by the year.
Played by the year. Also, played by the ear. Not just the year, but the ear also. Okay. Just a final question before we let you go. You've also approved an equity investment of up to 500 crores in Muthoot Money. How big do you expect that business to be from here on? It's a wholly owned subsidiary. Just wanted to understand, can this be another of your growth drivers from here on?
Yeah, it can be because we started the Muthoot Money about 6 years back, starting the to diversify and start the hire purchase business. We started it by financing used cars, used commercial vehicles, etc. But after COVID, it got a big hit, and then the portfolio started behaving badly, and we are largely running it down. It had a portfolio of about 600 crores. Now it is only about 70 crores. In the meantime, since we already put capital in the company, we didn't want to waste that capital. We started gold loans there. Today, it has about 900 branches in the gold loan sector. And today, as everybody knows, gold loan is doing well. So we will certainly see that it also does well. It has today a portfolio of 6,000 crores. That is why we put in 100 crores of share capital. As long as it is a 100% subsidiary of Muthoot, all the profits and all the business definitely will come to the parent only.
All right, but you have not heard anything from the regulator. If the regulator demands, I think in the past you've said you'll fold it into Muthoot itself.
Yeah,
right?
You can't work against the regulator. If they want us to do something, we will do it. That's it.
But you have not heard from them as of now about folding it in.
Not yet, sir.
All right, Mr. Muthoot. First of all, congratulations. Super numbers. Wishing you all the best. You have teased us for the last few weeks, but now you came out there and you've revised that guidance. All the best. We'll chat up soon and we look forward to speaking to you.
Thank you.
Well, on that note, though, I think we'll slip into a short break, come back. We'll continue to focus on markets and stock-specific action. Stay tuned.
It's a clean sweep for the NDA in the Bihar elections. That's something that the exit polls did indicate. But as you can see on the top of the screen, 180 crossed in terms of leads. It's a very clear victory for BJP and Nitish Kumar. So obviously, as you can see, a big one, a thumping victory. 180 seats where they're leading, well above the halfway mark. And in the others not doing particularly well, the RJD plus. So what we'll do is take a short break on Chartbusters. We'll wrap up on this edition. Come back on the other side. You have the team of Trading Guard, which comes up.